Hello everybody and welcome to the Tortoise channel. Here we are for another video, and today's video is going to be on the latest 13F filings. For those of you who don't know, every quarter, well, yes, at the end of every quarter, fund managers in the United States have to disclose their holdings to the public to abide by the SEC, right? So the Security Exchange Commissions, to abide by the rules, to remain compliant if they are fund managers with us with over 100 million in assets, right? They have to disclose these holdings, and this is very good for us retail investors because it allows us it allows us to gain insights into what they were buying, selling, or holding in the last quarter. Now, it's important to understand that what I will be showing you is not real-time data, right? So by the time we are looking at the fund, at the portfolios, they may have already changed the positions, but many of the portfolios that we track are managed by long-term investors like ourselves, and so chances are most of these holdings will still be there, right? Because they are not buying and selling on a quarterly basis every single one of their positions. Some of them run very concentrated portfolios as well, and we can take very good ideas. And in fact, I've made many investments over years, all right, over the last several years, exactly after assessing some of these holdings, right, and some of these positions that they have bought. And so let's see. I haven't done that yet for this 13F filings. I will be doing this right here in this video. And I'm recording this on February 18th, and I will be posting this tomorrow on February 19th. So smash the like button if you find this insightful, and let's see what the big money is buying, selling, or trimming, right? Because that's important. Okay, guys, hopefully some of those positions will be in our own portfolio right now, right? Hopefully, they will all be purchases, but we will see. Also, another important thing to mention, look at that. Like a Tortoise shirt. I told you guys, if you have been following the channel, that I was gonna buy some of these shirts, and sure enough, we got them from Timo. You can see the logo right here. The quality, right? The fabric is not really good, but anyway, they serve the purpose, and the purpose is I want to spread the word, right? And so, in the Like a Tortoise logo really goes a long way in helping us grow over time. And you can see that I'm using my mug here as well. And this is what I intend to do, right? To create value while wearing my shirt. All right, guys. Let's talk business right now, okay? As you can see, I'm subscribed to the Thorough newsletters, which they send every single day, right? With providing just a snapshot of what's happening, what is most relevant on the day. And you can see that 13F filings offer a delayed partial snapshot of big investors' holdings. They can move markets but miss timing derivatives and intent, okay? Because by the time they report this, their portfolios, remember, may have already changed, right? This is not real-time data. It's backward-looking, right? So take that into account. However, this is very important for us long-term investors, especially if we are following other long-term investors who only touch the portfolios every now and then. Okay, and so where do you get that information from? To see what they are doing, we can check out Data Roma. And Data Roma, for those of you who are new to this website, is completely free. You can upgrade it, but there is no point in paying a subscription, in my humble opinion. And I certainly don't do any of that. And I can still come here, right? As you can see, and I can see exactly what they are doing. You go home and you can see Superinvestors portfolio updates, and look at that. They disclose their filings, right? So they reported on February the 17th, as you can see, February. So you can see a lot of updates right here. And some of these are the best investors in the world, right? From Warren Buffett to Lilu to Bill Ackman, many of whom we follow very closely. So the first thing that I like to do is has anybody bought, sold any of our portfolio positions? This is how you can start. if you don't have a portfolio yet, and if you are looking to build your portfolio from scratch, this is a very good starting point because it can give you a few companies for you to then do your own due diligence on, right? But you already know, for example, that if Warren Buffett bought a 20% stake in a company, you better bet that that company really meets, it's not every day that you will see an investor allocate 20% of his portfolio into a single holding. So when those moves happen, they really attract my attention, and these are the moves that I really pay the most attention to. All right. So because I do have a portfolio, right? The first thing that I like to see is to look into the companies that I own and see if they bought, sold, or trimmed any of those positions. So let's start here with Alibaba. Let's press enter and see what we have right here coming up on the screen. Let's have a look so we can see Baba. And all right. Look at this. Okay, so what do we have here? Right here, we have some interesting moves right here. Why is this? Okay, look at that. So David Tepper, I made a video on David Tepper, Alibaba Investments, a few months, well, several months ago when David Tepper started a position in Alibaba. And sure enough, you can see that Alibaba still accounts for about 11% of his portfolio, which is quite significant, right? It's quite significant. But we can see, if I go right here, that David Tepper has been busy trimming a lot of his portfolio holdings, not just Alibaba. But look at this. Look at all the number of, look at that, Alibaba. So he reduced his stake by about 20%, Amazon by about 12.82%. He made a lot of reductions to these allocations. As you can see, he trimmed a lot of them, right? I mean, many of them, for certainly Alibaba, had run quite a bit ever since David Tepper bought the stock. I think he bought around the $80 marks, give or take. And so with the stock currently trading at 160, for someone like Tepper, it makes sense for us to see some trimming right here. But the same goes for all the other companies, as you can see right here. And he only bought, what has he bought from scratch? He bought this ball, which I have no idea about. And then he added to a few more positions. Look at that. He added 28.79% to Alphabet, which now accounts for about 8% of his portfolio. You can see MSCI South Korea ETF. Okay, so he did, but these are just small percentages of his portfolio, as you can see. So I don't really read too much into this because these are very small percentages, even though, yeah, it's granted, right? The portfolio, he runs almost a $7 billion dollar portfolio, but these positions are not significant, and so I don't really pay attention to those. But sure enough, if you look at his 5 top holdings, these are the ones that I really pay attention to. And he made Alibaba his largest portfolio allocation several months ago, which made me even more bullish on the company, even though my cost basis is even lower than his. But anyway, so that's one thing about David Tepper. And what else can we see? Let's go here. Look at that. Dennis Hong, this guy he started a position in Alibaba, and he made Alibaba 10% of his portfolio. What's interesting is that Dennis Hong also runs a concentrated approach to investing, as you can see, right? Look at this. Okta, for example, accounts for 14% of his portfolio. Then you see 4 accounts for 13.62%. So I love this. This is the kind of portfolio that I really love. A concentrated, so a high concentrated, high conviction portfolio of great companies. And you can see that he just made Baba one of them, right? Pretty cool. He reduced a ton of them, and he only bought 2 companies, Alibaba and Amazon. Look at that. It's also a new purchase. Interesting. Okay, so that's it. He added to CoStar Group. I have no idea what this company is. He added 70.94% to Liberty Media Corporation Formula One Series C. No idea what this company is as well, but either. But you can see that, yeah, I mean, this already gives us a good, a nice glimpse of his latest moves, which is pretty cool. What else do we have? Let's see. So we have these two people buying Alibaba, and then we see a lot of people reducing. But as you can see right here, it's only 2.44% of the portfolio, 1.67%. Nothing really interesting. The only interesting things that we have right here, really interesting things, is David Epper reducing trimming the position right by about 20%, and Dennis Hong going all in on Baba. So he bought like almost 11%. He allocated almost 11% of his portfolio to this company. Let's have a look at other companies in our portfolio, starting with PayPal. This is going to be very interesting, right? What happened? Let's have a look. What's let's see what we have, guys. I'm very keen to see who has bought or sold Baba, if anyone, right? If anyone. Uh, let's see what we have right here. Oh my God. Okay, so we have a few things here. Norbert Liu, who had made Alibaba 12% of his portfolio. Excuse me, not Alibaba, PayPal 12% of his portfolio. He reduced that stake by about 3.31%. Same thing with Lidl Train. This guy, David Katz, added 6.63%, but it's just 1.41% of his portfolio. But Norbert Liu, this is a guy I pay close attention to, because this guy, ladies and gentlemen, take a look at this portfolio. He runs a $300 million portfolio, and look at that. Talk about concentrating, right? So 36% of his portfolio is allocated to Berkshire, with 18% allocated to treasury bonds. Okay, so he's probably happy collecting those 5% risk free. Pretty cool. He reduced his stake in Crocs, but also in Alibaba. And his Pinduoduo allocation remains unchanged, as you can see. And he didn't trim his Alibaba's position, his PayPal's position by a lot, only a 3.31% trim. So it still accounts for 12% of his portfolio. And the fact that what am I always mentioning Baba? My God. Jesus, sorry about that. And the fact that PayPal still deserves a place in his concentrated portfolio, that tells you a lot, right? Because this guy, his due diligence is incredible, and he never buys a company without having a very high conviction and on it, and without doing without doing a lot of research. And you can look him up, right? He has achieved great returns over the time he has been an investor in the money manager. And so this is someone that I definitely pay attention to. All right, cool. Nothing really else as far as PayPal is concerned. So let's close this. Let's close this as well. Moving on to Lululemon. Let's see what happened to Lululemon, if anything happened at all. Let's see. Wow, what the hell? Michael Burry increased his exposure by about 100%. Let's have a look. Let's have a look here. Michael Burry, who we all know. Holy damn, look at that. Right? So right now he has 3 companies in his portfolio, and Lululemon already accounts for 35% of his portfolio. So it represents 35% of his portfolio. So he added more to it, as you can see. This is something that I really like. Oh, but look at this. So the portfolio was updated on September 30th, right? So he hasn't exactly. So he hasn't. This doesn't reflect his most recent moves, and so yeah, I thought he had done that before. So adding another 100%, I mean, that would be a bit weird. But yeah, so this is not from February, as you can see. It's still September 30, 2025. So let's not read into that. And let's see what else we have right here. Come on. Okay. Yeah, nothing really interesting, as you can see. Hold on, Francis Roshan. I think that's how he is. That's how you spelled his name. I know this guy. This guy has been compounding by about 15% for decades. And so I'm very interested. Yeah, look at that. So the portfolio update. This is the last update is December 31st. We are now in February 18th. So let's have a look. I had no idea he had bought Lululemon, but you can see that he did that, right? So let me have a look. Where is Lululemon? Right here. Uh, Lulu? Yeah, right here. He added about 0.16%, but again, I mean, it's only 1% of his portfolio, not significant. So let's move on. These are not moves that really make me feel excited. If you and of course you already understand why, right? I want to see big allocations. Those are the ones that really jump out at me. Let's have a look at our Ulta Beauty and see what happened. Nothing significant. Look at that. Nothing really. Not many people own Ulta Beauty, if any. Look at that. Only one portfolio manager actually has Ulta Beauty, which is incredible because this is a company that has been a phenomenal compounder over several decades and is a cannibal stock. It has delivered substantial returns for shareholders since inception. So yeah, this is a bit weird, but anyway, I mean, we definitely appreciate it because we were buying it hand over fist when it was trading at its 52-week lows, and the rest is history. Let's check LVMH and see if anything interesting jumps out at us. Nah, nothing really. Okay, it may. Yeah. So well, remember these are only. So they may have bought the European shares, right? If they only have to disclose their US listed stocks, so their US, any investments that are US listed, those are the ones they will have to disclose. So if you are a fund that is buying LVMH in its main exchange, right, in Paris, then of course it won't show up here because it's not US listed, right? It will only show up here if you have bought the ADRs. But if that is not the case, it won't show up here. Okay, cool. What else do we have in the portfolio? Let's have a look. I don't think Evolution AB is on many investors' radars. In fact, it wasn't when the stock was trading at its all-time highs, and I'm pretty sure it's not going to be today when the stock is facing a lot of short to medium-term headwinds. Evolution AB, let's see. Not found. Evolution AB. Again, why is this not showing up? Evo? Is it Evo? Let's try Evo. Yeah, yeah. No, it's not showing up here again because only the ADRs, but Evo is not a US listed business, right? And for that reason, its primary listing is Sweden, and for that reason, so that is not showing up here. What else do we have that I wanna check? I mean, nothing really. Yeah, I don't think so. What we will do now, once I do all of that, what I will do now is check some of these most important investors one by one and see exactly what they were buying and selling. Okay, so let's analyze like six of them for this video. Otherwise, we run the risk of making our video too long. So, and I don't want you guys to be bored. To be bored. So let's start with some of the investors that I really like to pay close attention to. David Heiner is a famous value investor, but he runs. He has too many portfolio allocations. Again, I don't really like to pay attention to these guys because they never really go all in a few handful of companies. In fact, you can see David he actually has a 20% allocation to a company. This is good, okay? but you can see that he owns what I believe to be too many companies, and many of them only represent 1%, even less of a percentage point to the overall portfolio. I don't really like to pay too much attention to that. Okay, so let's move on. Bill Ackman, for example, is a guy that I like to pay attention to. So is Bill and Melinda Gates Foundation Trust. They also run a concentrated portfolio. Look at that. Berkshire Hathaway, it's still 27% of his portfolio. Waste Management, about 18%. This company has been a great compounder over time. I did some due diligence on the company, but it just, yeah, I ended up not investing in it. They reduced the stake in Microsoft, okay, and then the other positions are too small. So let's move on. Nothing really interesting. What do we have? Bill Ackman is the next one. Okay, what do we have right here? Look at that. He reduced Brookfield, as you can see, only slightly, right? Not a big deal, probably due to valuation concerns. Uber, he reduced it by 0.21%, but it still accounts for 16% of his portfolio. Amazon, he added a lot to it, right? And he bought Meta, and I discussed that in our previous video as well, right? Where I talk, not the previous video, but I think it was 2 videos ago that I really discuss Bill Ackman's report. And in it, you can see that I talk about Meta and Amazon, both of which he bought recently. Very interesting. And you can see that he sold out of Google. Look at that. After making a lot of money, because Google at one point was about 15 or 20% of his portfolio, but he reduced that stake significantly ever since the massive run this company has experienced. And of course, it has been a phenomenal investment for sure. So awesome. Let's crack on. Who else do we have here? Norbert Lu, we already discussed this portfolio, right? What about Li Lu, Himalaya? This guy has been compounding by about 30% for over a decade. What a great investor. Portfolio date 31st December 2025. You can see he reduced as well his Alphabet stake, right? It makes sense. And this guy was buying when the stock, was massively undervalued. So fair play to him. He made a ton of money. I pay a lot of it. Whoa, he bought Crocs. Hold on. He bought Crocs as well, like Norbert Lu. Interesting. Okay. I analyzed Crocs at the time I was doing due diligence. At the time I was progressing with my research on Lululemon, but then I decided to choose Lululemon, right? Even though they are not really like competitors, but still, I would never own these two of these companies because they operate in a similar sector, right? And so I ended up settling for Lululemon. And but yeah, so here we go. And you can see that he reduced Alphabet. As I was saying, it makes sense because it was already a large position and he has made a lot of money. He was certainly sitting on a lot of unrealized profits. It makes sense to trim that position as well. And yeah, that's it. Makes sense. And look at that. It still is. Oh, but look. So he reduced by about 3.62%. These right here, but then he added 3.75% right here. So Alphabet still accounts. This is incredible. But remember, Li Lu also has investments in China, and those ones, because are not US listed, won't turn up right here, right? Unless he buys the ADRs, which is what we did what he did with the Pinduoduo. If you buy the ADRs, they will show up here, right? Because they are US listed. Fantastic. Right, so let's move on. Who else do we have? Mr. Warren Buffett. It's not Warren Buffett anymore because the guy already stepped aside. Glenn Greenberg. This guy I like to pay attention to. We already discussed Stepper. Brian Lawrence is a very good one as well. Who else do we have right here? I want to show you more investors. Let's make this an even more valuable video. Let's see what else do we have. Pat Dorsey. I'm not sure. This guy is well known. Let's have a look at what he's been doing. And guys, this is absolutely free. You can come here to Data Roman and you can check each of the portfolios at your own discretion, which is pretty cool. Let's see, Josh Tarasov is a very good investor as well, who runs a very concentrated portfolio. These are the guys that I really pay attention to. These are my favorites. This is a bit slow. Bear with me 1 second. Come on. Okay, so Warren Buffett, here we go. What else do we have here? He continued to trim his Apple stake. Bank of America, he added to Chevron. He added to Shub Limited. He added more to Domino's Pizza. Okay, but you can see that it's less than 1% of his portfolio. And he bought New York Times. Interesting. And he added to Lamar, and he trimmed a lot of his positions as well. But nothing really exciting, right? So let's close this. And let's show you, why is this so slow? Let's show you the other portfolios. Come on. Okay, here we are. Glenn Greenberg. And here, what can we see? So one main holdings reduced. He added to a lot of his allocation, right? He added to a lot of his positions. Okay, Primerica. He bought Applied Materials. Many investors own these businesses. They all own the same companies. It's incredible. He also bought the S&P Global, which has been a stellar compounder over time. Okay, he added a lot. He trimmed his main holdings, right? Look at that. Elevance Health, 31%, probably due to valuation concerns as well. And he added to a ton of others. All right. Like AutoNation, I know this one as well. Lennar Corp. Remember, we saw Buffett this one as well. I know Superinvestors are buying or adding to this one. Interesting. So let's close this. And now let's see bloody ads. Let me get rid of that. Brian Lawrence, look at this beautiful portfolio. Only 8 companies, right? Look at that. It's a $233 million portfolio. Only 3, 4, 5, 6, 7, 8 companies. I love that. Look at that. Another guy who bought Lennar. They all own the same businesses, as I mentioned. Interactive Brokers is about 28% of his portfolio. I like Interactive Brokers is a company that has been on my radar. Some of my clients own this company, and but I never really pulled the trigger on it because it wasn't well. I mean, I don't understand the brokerage business that well, the sector right that well, and so I just prefer to stay away from it. But it's been a fascinating compounder as well. And you can see that he adds 26% to Guidewire Software Inc., probably on the back of the software decline that we saw due to AI fears, right? So this is interesting. It's a software company, and for him to add it means he doesn't believe the company is at risk of being displaced by AI. So pretty cool. All right, let's continue. And what else do we have? Let's see. Pat Dorsey Asset Management, he added to another 11% to ASML, right? I mean, we all know this company for sure. If you have been an investor for a while, you can see that everybody talks about this company. When everybody talks about something, it usually means it's already expensive. And I think this company is well expensive by my standards. But Danar, another company that is widely owned, this, like I said, they all own the same companies, but he bought Life Nation. Many great businesses right here, right? But I don't think they are cheap for me to get interested. Certainly not. That is certainly the case for ASML. Cool. So, Mr. Pat Dorsey, let's check George Tarasoff, Terry Smith. These are all very good investors. Terry Smith, for example, is known as the British Warren Buffett, right? Then we have Chuck Aker. Then we have Francis Chu. We already discussed that. Manish Pabrai, let's discuss his portfolio holdings as well. Greg Alexander, another very good investor. Okay, let's do these ones. And let's see what we have right here. So Josh Tarasoff, look at that. Another 8 stock portfolio. Love that. Amazon 21%. He reduced his stake. Same thing with Brookfield. He added to Markle and he added to Trupanion, right? Very concentrated portfolio. He trimmed a lot of his positions, probably because of the run-ups they had. But interesting to notice here. I can see a lot of Google, Amazon, and Brookfields, right? I mean, they all own the same companies, guys. So these are the companies that you can start analyzing, and then you can see if they fall within your circle of competence or not. Following our framework, and you may have something. You may be onto something there. Look at Terry Smith. He trimmed a lot of his positions. He bought Nutanix. He also bought ADMA. I have no idea what this is, but considering how low a percentage of his portfolio is, I'm not particularly interested. But he added more to Intuit. On the back, Intuit has been under pressure because of AI fears. He also added more to Zoetis, animal health company, animal healthcare company, right? And he reduced a ton of he trimmed a lot of his positions. Okay. What else do we have here? Let's see. Going through that list, Chuck Aker. So he added to this one, CoStar Group. He trimmed his positions as well. I see a few ads, right? He added more to Copart and also to Fair Isaac Corp. I know other super investors who also own this company. Interesting, very well, but nothing that really jumps out at me. So let's crack on. Next one is Francis Chu. Oh, I think we already discussed. No, we didn't. Did we? I don't. Have we discussed this one? I think. Yeah, we did because of. So Francis Chu. No, he didn't. All right. So he didn't buy or add to anything. He simply reduced Alphabet and other companies like Moody's, but they are small percentages. Nothing interesting. Let's continue. What else? Okay, Manish Pabrai. Again, Manish Pabrai is a man and an investor I do respect quite a lot. However, I don't like the kind of investments that he makes because I don't think these are high quality companies at all. And some of them operate in highly cyclical businesses where earnings are very unpredictable. Not really my kind of portfolio allocation, right? But anyway, because I know he runs a concentrated portfolio, I like to take a peek at his latest moves just to see if anything jumps out at me. But yeah, let's continue. What else do we have here? Greg Alexander, take a look at that. 5 companies in this portfolio, my man. Group 1 Automotive Equitable Holdings, Lithium Motors. He added 68% to Smith, but it's only 4% of his portfolio. So his portfolio remained largely unchanged, almost a $1 billion worth, almost $1 billion dollar portfolio. That is incredible. Look how concentrated this man is. I love that. I just love it. It means they really understand what they own very well, because and the portfolio faces a lot of volatility, because when you own a very concentrated portfolio like ours, then if one of them do very poorly, I mean, even if they do very well, you will see massive spikes up and down in the portfolio because it's very concentrated. So any particular holding, a sharp move will cause the whole portfolio to move as well, right? So yeah, cool. But I'm okay with that. Many people are not. And that's why many of the people I work with typically own between 10 and 15 companies. And that's it. You can do very well by owning like 10 great businesses, 12 great businesses, and you will see the volatility decline sharply. Okay, awesome. Let's continue. What else do we have? Who else do we have right here? Robert Vinal, another great investor who runs a concentrated portfolio. Then we have Guy Spear. Let's see what this man has been doing. And last but not least, Mr. Michael Burr. We already discussed him. So that's it. That's it. Let's see. What else do we have here? Let's find out. So we have two more portfolios to go through. Robert Vinal, no ads, no first-time buys, right? He only trimmed these positions, his stake in Carvana, Meta, in Interactive Brokers. This guy also owns Interactive Brokers, but that's it. He didn't do nothing. So look at that. He didn't do anything to his Salesforce position, even though he owns it. And Salesforce has declined a lot since the first time he bought it. So for him not to add it means that he's not completely certain whether or not AI can disrupt this company. At least that is how I'm reading this, right? Let's check our last portfolio, and that is Mr. Guy Spear. So let's have a look. Aquamarine Capital, as you can see, he reduced a lot of his, he trimmed a lot of his positions, right? And he didn't buy or sell. He didn't buy or add or anything. Yeah, exactly. Only trim these positions, right? So that's it, guys. I mean, look, I hope you managed to find this insightful, right? Based on what we discussed, it's nice to see that some investors are buying Alibaba for the first time. I think they are late. I mean, if I were in their position, I wouldn't certainly be chasing Alibaba at current levels. Even though this is backward looking, they were probably buying Alibaba around $150 a share. I certainly wouldn't do that, but I mean, these guys are super investors for a reason, right? Maybe they know something that I don't. And so, but I certainly wouldn't be chasing at present levels. But yeah, I mean, few things that jump. I was expecting to see more software names, right? Because the entire space has been crushed as of recently on the back of AI fears. So for these guys not buying, for them not to be buying more into these companies, what that tells me is that they don't really know how big the disruption will be, in what names will be affected. And that makes sense, right? Because we don't have a crystal ball. Many of the founders and CEOs running these companies don't even know that themselves, let alone investors. So I understand that. But Google is widely owned. Brookfield widely owned. All these companies are owned by every single one, almost every one of these investors. And look, it makes sense to some extent, right? Because they have been phenomenal compounders. And anyway, it's just, it's how it works. So guys, let me know in the comments below if you found this video insightful. Nothing really exciting that I will look at this more calmly and see if I can take some ideas away, but nothing really exciting based on what you and I discussed along this video. So yeah, let me know in the comments below if you liked this video, and I will for sure put out more videos of this kind going forward. And thank you so much once again for all the support. Stay safe, everyone.